Joining us now to talk about is Kevin Hassett, former chair of the Council of Economic Advisors, and Kevin Brady, former chair of the House Ways and Means Committee. Not only do I think he's right, gentlemen, I want to preserve them and extend them. Now, Kevin Brady, I'm going to you. The original tax cut was estimated at about $1.5 trillion cost in terms of revenues. That was back in 2017. Mr. Chairman, you can correct me, but that was the number, as I recall, $1.5 trillion. Now, here's what's bothering me. I want to get you in, then I want to get Kevin Hassett in. The Joint Tax Committee is now estimating that if you extend these tax cuts for another 10 years, it's going to cost $4.5 trillion. And yet, in the meantime, the revenues from the tax cuts have exploded. And they've affected, Trump was right, every single category. Upper end, middle, lower end, all got it. Standard deduction from $1,000 to $2,000. Child tax credit, $1,000 to $2,000, et cetera, et cetera. Why are they estimating such a gigantic revenue loss? Or is it the usual tricks from the liberals on the Joint Tax Committee that they don't like Trump and they don't like tax cuts and they hate supply-siders? What do you think, Kevin?
Well, first, anytime I have you two together, I need to say thank you for the work you did, crucial work, in developing the tax policies, the concepts that led to the Trump tax cuts. And at the end of the day, the greatest winners from those Trump tax cuts were average workers who saw in 3 years the largest increase of inflation-adjusted earnings since America began recording those numbers. So the corporate rate cut, and obviously the way we modernized all of this, was an economic boon for workers. So one thing, you know this, both Larry and Kevin, is that we didn't just do $1.5 trillion of cuts. We did $5.5 trillion of cuts. We paid for a good part of that, $4 trillion, through thoughtful reforms that fueled growth, reforms that fueled lower taxes. At the end of the day, we only had a net expense of $1.5 trillion. And much of that, by the way, has been recouped by stronger earnings.
Right.
As you know, corporate rate.
Right.
But yeah, the corporate taxes today
are
at 21%, are generating more than was projected at 35%. So the growth has really driven not just workers' gains, but revenue to the government as well.
Kevin Hassett, we don't have a lot of time, but I got to read you this stuff from today's Committee to Unleash Prosperity Hotline. The richest 1% paid much more. I mean, Biden always says the rich don't pay their fair share. In 2016 pre-tax cut, the top 1% paid 37% of the taxes, okay? By 2021, the top 1% paid 46%, 45.8%, okay? So actually, the rich are paying more of their fair share. They only make about 20% of the income. So the point is, how do we have to drive this home? These revenue loss estimates from the committees are wrong. They're just wrong. They're always wrong, Kevin Hassett.
And there's an especially frustrating thing here that I know that Chairman Brady and you, it's going to turn your heads inside out when I say this. But you remember they didn't let us have dynamic scoring.
Right.
But then we got this incredible boom in business profits and in small business profits. And so revenues went up. Revenues have about doubled since before when the corporate rate was 35%. But now the revenues are really high. And when they say, well, what happens, if you have to cut rates relative to that really, really big pool of revenues, and then they say, oh, it costs a lot more, right? Like, so think about it. We had this huge Laffer curve effect. We doubled revenues. And so now when they take away the tax cuts, they say it costs twice as much.
Right.
Because they're like allowing, like it's in the data that it doubled, but they're not in any way adjusting their expectations about dynamic effects of policy. And it just shows that these people have bags over their heads.
It's poor.
I mean, it just makes no sense.
You are so right. I mean, Kevin Brady, we're going to have to fight this. Biden is going to, Biden's going to leave Trump. If Trump wins, if he wins, Biden will leave him a $2 trillion budget deficit. Okay, that's most unfortunate. And it's $2 trillion as far as the eye can see. But the point is, that's a separate problem. That should not stop the tax cut. The tax cuts will yield more prosperity, more growth, and more revenues. I'm going to give you the last word, Chairman Brady. I want you back as chairman of the Ways and Means Committee. Wait, real quick.
Well, I'll tell you what, we've got a great chairman, and the House Republicans really leading the way, I think, preparing for tax reform. So locking in those lower rates, especially for businesses and families, are so important to growth, and small businesses as well. Look, we know there'll be a cost to it, and the deficit is higher. That will be a factor in this. But as we showed in 2017, you can lock in lower rates. You can make the reforms that can be fiscally responsible and grow prosperity in workers' wages at the same time.
That's it. I'm sorry we're out of time. We did the Ponahawk stuff, but